Just the way we have patterns in other charting tool, we have patterns in Renko charts as well. So we will discuss all the patterns in detail now. Every pattern has a specific entry, every pattern has a set stop loss, and every pattern has a way to find the target. So now let's look at the targets and the charting tool, or rather a process which will help us to identify the trading setup, what kind of trend that particular Bank Nifty or Nifty is exhibiting, and where to take the entry, where to put your stop loss, because I strongly believe that without a stop loss, a trader should not trade at all, almost equal to gambling if you're doing something like that. So there has to be a process, there has to be a set method for trading, and Renko charts, again being objective, they bring in or they help to carve an edge for a trader. We are going to discuss briefly few patterns which will tell us about momentum. There would be patterns that we will discuss which tell you about reversal, and there would be patterns which will tell you about participation in the ongoing or a continuation pattern that we can use to trade a particular instrument. Here in case we are talking about Bank Nifty and Nifty, but the same logic could be applied to your commodities, it could be applied to forex trading, it could be applied to trading your cash equity as well as the derivative segment, the futures and option trade segment as well. Just that the box size would vary as per the instrument. Here specifically we are discussing Bank Nifty and Nifty. First pattern that we are going to talk about is a pattern called as one back pattern. Now the name itself says there is something one, so related to a one brick is what we can talk about in this particular pattern. First, let's talk about a one brick bullish pattern. So there would be two bullish bricks. After that, a pullback wherein only one brick is printed on the bearish side, and then a swing breakout to break the previous swing high, and we have a continuation pattern which tells us that prices are in a strong momentum. Just one brick that they have pulled back in case of a bullish one brick pattern, and they are continuing in the upward direction. So where do you take the entry? When the swing breakout happens, when the next leg, the bullish leg resumes and it breaks above the swing high of previous swing high, that's where your entry signal lies. Your stop loss is one brick below that bearish brick. So one bearish brick wherein the price pulls back, below that one brick is your stop loss, and finding the target is what we will discuss for ongoing after this. So this pattern gives you a lot of affordability because the stop loss is very small out here. In case of Bank Nifty, if we are looking at a 35 brick chart, so 35 points makes one brick. In that case, your stop loss
105
points. In case of Nifty, if you're looking at a 10 brick chart, your stop loss will
30 points.
So a small stop loss is what this particular setup gives you and helps you to capture the momentum in a particular trade setup. Now here's one example of Nifty wherein a 20 brick bullish chart is what you can see on your screen. So every fresh brick is printed at an interval of 20 points. Nifty moves by 20 points, a fresh brick is getting printed. Here you can see that we have a bullish swing, a pullback by just one bearish brick, and then the swing breakout, the top of the previous swing high gets broken. That's where your entry for this particular setup lies, and a stop loss is one brick below that bearish brick that you can see out here. Another example of Bank Nifty, this is a 70 point Bank Nifty chart. So every 70 point bullish move in Bank Nifty, a fresh brick is printed, and one brick above the other. First minimum at least two bricks, bullish bricks are required. Pull back by just one brick. So the name itself says that it's a one brick pattern, and one brick it pulls back and then gives you a swing breakout and the continuation of the trend in the bullish direction. Now let's look at how we can find the targets, because there has to be, since if the trader is a scalper or an intraday trader, he needs to know where the profit has to be booked. For a positional trader also, he needs to know where some profits have to be taken home, because We just can't keep on being in a trend for a long time. There has to be a place where we need to take some profit home. Because I strongly believe that when we are in market, we are trading the trend. The trend may be strong, the trend may be weak, irrespective of the condition, but there has to be a place where profit booking has to happen at some point in time. Every trader wants to take home profits. We are investing our hard-earned money, we are investing our time in this particular business. So somewhere you need to take some profits home. So where would that be? So that is the target which the Renko charts will tell us. How these targets are calculated? So here what we consider is, we need to consider the brick value, and we need to understand the breakout level for finding the target. This is an example of Nifty to find the potential target. In Renko, they are called also as extensions. So targets is equivalent to extension, what you can see in Renko charts. So technically they are called as extensions. A swing breakout level, which is known to us, plus you add the number of bricks in that swing. So you calculate the number of bricks in that particular swing, multiplied by the box value. So box value is decided by the user. Here in case of Nifty, the box value is 20 that we are seeing, multiplied by the number of bricks which are there in the swing, add it to the swing breakout, and you get your extension, or you get to know your target for a particular setup. So this is how you find the target. The formula is right in front of you on the screen, where you can see what is the calculation, how to calculate the target, and which formula to be used to find the bullish swing breakout targets. Now let's talk about a pattern which is one brick bearish swing breakout. Similar to what we have in one brick bullish breakout, we should have minimum 2 bearish bricks. The pullback is just by one bullish brick gets printed. So 2 bearish bricks, pullback by one bullish brick, and then swing breakdown in the next leg, and resumption of the trend in the downward direction is what this particular pattern will give us. The entry is at the swing breakout. So where the previous swing low is formed, breaking below that is your entry. Your stop loss is one brick above the bullish brick that is printed in this particular swing, and the target is calculated again, where we will come to the target calculation once we discuss this setup. So minimum 2 bearish bricks is what we need, one pullback with only one bullish brick, hence the name one back bullish or one back bearish is what we have seen, and the swing continues in the downward direction. So here's one example of Nifty. This is Nifty 20 brick chart. We have a bearish swing followed by just one brick bullish pullback, and then breakdown below the swing. So a one brick bearish pattern activates. How to find the target? So swing breakdown level is what we know. Subtract the number of bricks from the previous swing, multiply it with the help of the brick size, and come and derive our targets for the breakdown, or the target for the one back bearish breakdown. Next example is of Bank Nifty, wherein we have a 70 brick chart again. So we have a bearish swing, pullback with just one bullish brick, and then continuation of the trend in the downward direction. Again here we know the swing breakdown level, so we make a note of that. We find the number of bricks in that swing, the bearish swing, multiplied by the box size. So the brick size that we are using here is 70. So multiply it with the help of that number and reduce it from the swing breakdown level to find out our targets for the downward side, which is also called as swing extension, or which is called as the target for the breakdown of Nifty or Bank Nifty.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing.